I wanted to record this sequence right here. Obviously, everything in hindsight's 2020, but you can follow along with the thought process here using this market profile concept. Not even sure what to call this concept, maybe quite yet, but mainly this is Tuesday. We had a shortened week. That's why this period right here for Monday is until like 11 o'clock Eastern or something like that. Anyway, you can see here on the market profile, we had this big run up in B period. We tried to get into the prior day value, which is very small. Again, it's Monday, which was a half day, a holiday, but it's not nothing. It's still a value area that we had on a holiday. And price was really having a tough time getting higher than this little ledge right here. We came up right to that ledge and backed off. The thought process there with market profile is okay. A period, we had a very confident open, so we assume that we're going to be going higher that day. Confident open to the upside usually yields a trend day to the upside or just a positive day. Then we have B period that comes down and takes out the open, takes out A period low as well. What should happen there is we should continue to move lower, but we didn't. So once we got back up to around A period mid or so, that would be a good time to buy. But that's not really what I want to focus on here. The thing is that when B period failed to move lower, then we assume that we're going up. But just the fact that we came down and broke A period low and broke the open means whatever trend we have throughout the rest of the day is going to carry less probability of follow through, just because in trend days, typically what you see is price take off in one direction and not really look back, let alone in B period, right? So B period shoots up right here. We break A period high. C period rallies a little more. And then the thought process here, and this is what I want to focus on. The thought process here is D period had a chance to get to C period high and backed off. E period had a chance to get to D period high, but then backed off. F period, same thing. We had a chance. We tried to rally, but we kept backing off. That is market generated information letting you know that basically the rule or the concept is if you get close to a level, whether it's a poor high, a point of control, prior day low, whatever it may be, when you get close to a level, but then back off significantly, that in this case, that is a very bearish sign or bearish data point. So once the thought process here is once D period backs off, you start to, and then also breaks C period low. That's the second time we've broken one time framing. I don't have a lot of faith in a rally and a further continued rally today, just because of that. Then you have E period. Maybe I didn't short there. I'm not going to short on the first break of one time framing right here, but I will short on the second. D period comes down and breaks, or E period comes down and breaks D period low. Rallies back up. We can't get to D period high. Again, more bearishness. So the question is, where is your actual execution? I'm getting a bias from the market profile that we're not going higher because we keep getting close to the previous period's high, but backing off. But where is actually the short trigger? Where is the trigger to actually get into a trade? So if you come over here to the intraday chart with my RTH VWAP right here, this is what that looks like. This failed move lower. This is basically higher lows, okay? Higher low right here, higher low, or higher, lower high, lower high, lower high, lower low, lower low, lower low. Those are all bearish. It'd be tough. It'd be a very aggressive short to short above VWAP. But this is a higher time frame. This is our weekly trend line, and you can see we're just not getting past that. We're respecting that pretty well. We've tried to get through it 3 times and just fail. And the safest entry right here would have been right here. When we break through VWAP, when we broke through VWAP, that is also, we're breaking one time framing, 1, 2, third time. That means we're probably going lower. And again, a short above VWAP would be kind of aggressive. I suppose you could justify a short from the weekly trend line right here, because if this is just a level that we seem to have been respecting. So if that continues, you could take a short up here and just monitor to see what happens. But your safest short would be right here as we break VWAP. And at that point in the day, volume and delta are important. But I think the more important things are here, where you want to put more weight would be the fact that we cannot break above this trend line, so we remain bearish. We have bearish short-term structure right here with the lower highs and the lower lows. And then we also have on the market profile a failure to break above the prior period's high, with also the success of continually breaking one time framing to the low side. We are inside of the prior day value right here. Are we not? We're actually developing lower relative to the prior day because this is the overnight. So that's another bearish bias. You don't want to get greedy with those profits, because essentially what happened right here is that anybody that was long up here wanting to get a continued breakout, or anybody long from A period that didn't taken out in B period, like everybody long right here that's short-term traders are going to have to stop out at some place. You can reasonably conclude that VWAP is probably a very popular level where a lot of these short-term traders are just going to be eyeballing as a line in the sand, so to say. So the fact that we dropped pretty hard in G period all the way down to the point of control here, or that's not a point of control, that's another day. But the fact that we dropped pretty hard, to me, says that's a lot of stops getting taken out, and then you would want to wait for additional sellers to step in. But this would have been a good move just to capitalize on, once we hit the low. So anyway, just a concept, walking through the thought process for me helps when I watch these later, and to make sure that you don't miss this pattern again. You don't miss this concept with market profile. You don't miss this higher time frame trend line that we were obviously respecting. This is a great situation to memorize, so next time it comes up in a similar way, you don't miss the trade.